Hello everyone, and welcome to Day Trader S&P 500. Today is Friday, January 5th, 2024. This is Dale Woodson, editor of Woodson Wave and the YouTube channel Day Trader S&P 500. A lot has happened in the last 2 or 3 days since we last did a video, so as always we want to get our YouTube subscribers caught up to what our paid monthly subscribers to our newsletters have already. Okay, so as usual we like to start with the US10-year. This is a daily chart. Again, that wave 1 there is from the pandemic low of 2020 to the high right here in 2022. There is wave 2 there, and if we just stay in with the larger degree wave count, wave 3 equals 1 up here at 7.255. Wave 3 should at least gain equality with wave 1. It can go much higher, 1.618, etc. Okay, so that's the big count. There's the 1 in Roman numerals, the 2, there's the 3 target. Within wave 3, we have a 1 in parentheses up, 2 in parentheses down, 3 in parentheses up, 4 in parentheses down, 5 in parentheses up to make the larger degree wave 1 with a circle around it. Okay, there was our trigger there. There was our target, 5.1, and the market hit 5.021. After that wave 1, we have a wave 2 decline. There's an A wave down here to 4.363, a B wave up, and a C wave down. Okay, so we have a few different things here. C equaled A at 3.876. You can see the 618 there and the 786 there, and the market appears to have bottomed in wave 2 right in between all of those. There's still a Fibonacci target of 786 down here at 3.631, but this appears to be taking off in wave 3, and it's a wave 3 of primary degree with a circle around it. So again, to review, within that larger degree we have a 1 up with a circle, a 2 down with a circle, which is between a 618 and a 786 retracement. 3 gains equality with 1 at 5.551%. Okay, again, 3 has to gain at least equality with 1. It can go to a higher Fibonacci multiple, but first things first. We've had several triggers on bonds. Our next trigger is this A wave low. That will be the first sign that wave 3 up is in play. Wave 3 with a circle around it. And then we also have a trigger right here at the wave 1 high. Okay, a move above that validates wave 3 is in progress when it goes above wave 1. So we have a couple of upside triggers in the US 10-year. Okay, I wanted to show this for a while. I don't know that I have. This is the weekly chart of the S&P cash, and you can see we had a 4th wave triangle here. Those of you who have been listening for a while or subscribing know that I learned Elliott Wave on a 4th wave by accident, so couldn't get this one by me. I was ready for it when the B wave started going down to wave C. Anyway, that's not the point. The point is, this is wave A down from the all-time high, and there's so much divergence. The S&P cash has not made a new high in wave B, but the futures have, and the Dow has, and the NASDAQ hasn't, and the NASDAQ futures have. So there's lots of divergence, which is typical in a bear market. Okay, so here's the A wave down. There's the WXY for the larger wave B, and this is the key here. Up here we've got wave 5 with a circle around it, or 1 of 5. You can see there's 4, and we said this back in January of 22. This is either 5 or 1 of 5. It's a huge difference. 1 of 5 means way higher degree. We get a 1 up, a 2 down, 3 up, 4 down, 5 up, so way up there. Okay, but if it's 5, it's correcting much more. And we said this back then, when this goes A down and B up, we will know by C down. If you can see the angle of descent, if C is the same angle as A, then it's probably an A down, a B up, and a C down. However, if it starts going vertical like this, then we probably have something more like, not that, let me get a thing here. We probably have something more like a 1, a 2, and a 3, 4, 5. Let me make that bigger degree so it's easier to see. Degree, let's put it in cycle. There we go. Or primary. I just want to get it into a degree that you guys can see. Okay, so that's something that we'd be looking at, and 5 would be way down here. And let's put the settings on there so you can actually see the wave. There you go. Okay, so this C wave down, which really has just begun, it's in its infancy, will determine if this is a correction of just this move up, which is 1, and then we get ABC for 2, or if it's something bigger. Okay, and speaking of something bigger, I know that people have asked for this whole chart, or at least one person did anyway, so I'm going to have to back all this out to get you guys there. Okay, so let me make that full screen, and I'll get this as good as I can. You can see the 3, 4, and I've got 2 of them labeled there. Okay, and this is a bigger degree of trend. Let me see if I can scrunch that down at least a little bit so you guys can see what we're looking at. Okay, we can count this up from the 1974 low or the 1982 low, which is there. The 74 counts better. Okay, so there's 13 years of up for wave 1. Wave 2 was the 87 crash. Wave 3 is another 13 years up to the year 2000 high. Okay, and then you see we get an ABC for 4 into 2009. All right, and then we start to move up from 2009. I think we can see that a little better if we just scrunch all that up. Okay, then you see we've got, and I've got duplication here. Let me just remove that for you guys. Move that over there. Okay, I can see what we got. There's that 4th wave triangle. For me, it's easy to see a 4th wave triangle. You can find this is a triangle and you can work your way back. Okay, so the top before that is wave 3, and after a triangle, it does thrust up in the direction it was going before the triangle. So if you will, I'll show you guys this here again. Okay, so there's the trend up before the triangle, and we will clone that. If I can move that over, there we go. You can see it's steeper, much steeper. That's the thrust up out of a triangle. R.N. Elliott described it in his book. I love the R.N. Elliott's masterworks, by the way. Very good stuff. Okay, I think Proctor put that together in a book called R.N. Elliott's Masterworks, which I couldn't stop reading, just like Proctor's Elliott Wave Principle. Anyway, that's the bigger count there, and we'll see how that plays out. Okay, that's the S&P cash weekly. Again, divergences all over the place, and we can make that a bigger picture there. Let's get rid of that and do that so you guys can see the ABC there. There we go. A, W, X, Y, B, then C. Okay, that's it for the S&P weekly. Let's get into the daily here. Okay, and by the way, I do use some other stochastics. Okay, we got moving averages there, and I can show you that later. But the purpose of this is to show you guys this WXY, and this is in the S&P cash. Okay, you see we had a direct hit here, back here on this wave 4, another one here, and we got a lot more since the high. But anyway, we've got the A wave down, more of it's to that side, and we got a W up, which is a flat, an ABC, any 3 for the X, and then the Y ends up being an ending diagonal triangle. It looks like it topped on the 28th. Okay, and we've got a slew of open gaps. I think we're down to, what, 7 or 8 now? One was just closed recently. 1, 2, 3, 4, 5, 6, 7. Okay, so these should all be closed and wave C down. Okay, but that's a look at the bigger picture of that that B wave and the Y and the 5. So it's at least 3, if not 4 degrees of trend. But you can see there's a ton of gaps there. Usually you get 3. A breakaway in wave 1, continuation gap in wave 3, and exhaustion gap in wave 5. So there were 9 at one time, then they closed 1 or 2, and then they created another one. So Now we're at 7 and that one is closed. Okay, so that's it on the S&P cash. I want to show you guys what you know, we put out reports what you missed every day, sometimes multiple times a day. Here was the one on January 2nd. Okay, and as you know, we've been looking for a change in trend, and until there is one, the trend remains up. Okay, and it gave us over 650 points of gain in the E-mini future. So it looks like we have the initial 5 waves down, now 3 up. You can see there. And what I put out to our subscribers is, here's wave 1, there's wave 3, and there's wave 5. Each one is bigger. Wave 3 is a 2.618 multiple of wave 1, and wave 5 is a 3.618 multiple of wave 1. And the market moves in fractals. So what you see on a 1 minute, you'll see on a 10 minute, you'll see on an hourly, you'll see on a daily, you'll see on a weekly. So if this is a precursor or a small fractal on the hourly, this is what we could see in the daily. Okay, so those of you who can see fractals will see that. And here was our retracement target up to 382 at 47.99 and a quarter. Okay, there we go. We need to see all these happen to give us validation of a change in trend. And at this point in time, this is where we were, which was a couple days ago. And there's our previous target there. Good news is we have a new target. We'll get to that as we extrapolate out here. But that is the January 2nd report. And let me get over to the ES, okay? There's that ES with the same WXY, if you will. Let me make that bigger. Okay, and there's that WXY from that wave A low. There's the wave A low. There's a WXY. There is that upside trigger at 41.85, and it got us all the way up to 48.41 on the 28th on an ending diagonal triangle. I don't even know if that overlapped in the futures, but let me move that over so you can see there. And here we start down. There's 2 open gaps in the S&P futures, which is rare also because futures are open 23 hours a day. They close Friday afternoon and open Sunday afternoon, 6 Central or 6 Eastern. It's unusual to have open gaps in the future, so these have been open for a little while. This one's been open since the very beginning of this move. And in the S&P cash, you saw there's 7 or 8 open gaps in there. Okay, but that is the targets in there. The Y target fell between the 1.4. It almost hit a direct hit on the 1.414 within 2.5 points. I should have thrown a direct hit on there, but oh well. We're getting so many lately, there's no room to put them on the charts. But that's to be seen here real shortly. Okay, that was the daily. Now I want to get back into the reports. Okay, then we went into January 3rd. Okay, and there was the target of 47.9750, which was the 382, and you can see it hit 47.99 and a quarter. That was another direct hit. It just fell short of that 382, which was an indication of the stronger third wave coming down. Okay, we said this still could be extending. Here's a little tip for you guys I want to share with you that I gave my newsletter subscribers. It's hard for some people to count waves. Impulse waves are in groups of 5. Okay, 5 is an impulse, 9 is an impulse. Keep adding 4, 13, 17, 21 on to infinity. So if you're having trouble counting waves, just count the total. And if you get one of these numbers, it's impulsive, meaning in the direction of the main trend. And if you get the other ones, I don't know if I listed those. Yeah, the 3, 7, 11, etc. Those are corrective 3-wave patterns and multiples of 3, 3, 7, 11, and so on. Okay, so these are impulse. So that helps to count. For what it's worth, I don't know if many people do this, and I actually do Fibonacci extensions and retracements first and then put the waves in. My excuse for doing it backwards is I was born backwards, but seriously, I was a breech baby. But anyway, I do the Fibonacci multiples. I'll do one and then see where the 1.6 and all that is, and that's where that came up with a I think it was a 3618 and a 4618 there, but that's interesting stuff there. Okay, so that's the January 3rd report, and then I want to get into the ES, go from daily to hourly, and you can see there was the January 3rd report. There was the target, and there was a direct hit. Okay, so now we're looking at 1 down and 2 up, and then our 3 targets here. Okay, we'll just give you guys the whole thing, or at least up to here. Okay, here's where 3 gained equality with 1. Okay, or alternately it's just 1 of 3. That was on the 5th. I think I can show that to you guys better in one of these reports. Let's here's where we had 2 different wave counts. Okay, and the new trigger on January 4th, which was yesterday. Okay, and I think I did a couple reports, but this one's at the market close. More direct hits, new trigger, and here's where I outlined the different counts. There's that wave 1 down, there's 2 up, and you can see 3 equals 1 right here at 47.29 and a quarter. It went to 47.27, a near direct hit, and that becomes a new trigger. We can get into that later. But if this is 2 different ways to count it. If it is 3, okay, this 3 equals 1, then 4 should stay below the wave 1 low of 47.73 and a quarter right there. If it's just 1 of 3, then this is 1 down, then 2 up should hold below this 2 wave high. In other words, it cannot retrace more than 100% of this first wave down. 1 right there of 3 in parentheses, and there's 2. So we outlined the 2 different wave counts, the downside targets and the upside resistance, if you will. Okay, and then we have a new trigger right here. This trigger triggers these lower, this triggers the lower targets. Okay, targets there, and they're here, and there'll be more. I think I get into that. Okay, there's that new near direct hit on the retracement for 2 up. Okay, and then we have 3 down extensions, and here they are. The 47.29 was 1. It came within 1.75 or 2 1/4 points of that. There's larger or farther away downside targets that could still be attained. Okay, and this explains what I just showed. And there's a new trigger. Okay, I want to emphasize this. It's not going to go straight down. It could go above that trigger, which it has. Okay, but these are the bigger wave multiples right here, the 1618 and the 2618, and we have those in between too. But these are near-term targets. As this plays out, as the upward retracement continues, we'll get bigger targets further away as we get out into the larger degree trend. Okay, so, and then that was the most recent one right there, 41.85, but we just established this one here yesterday. Okay, I think that's it on that. So I want to get into our current wave count here. Tried to make this opaque as possible, and again, there's a couple different wave counts in play here. Okay, but we have that 1 down where 3 was greater than 1 and 5 was greater than 3. We'll see how that plays out, if that's a fractal of the larger degree of trend. Then we have a 2 up, which barely gained a 0.382, or just short of it. Again, a direct hit there. And then we have 3 down here, and then this is 4 is what we were looking for today, and we got it, a direct hit to within 3/4 of a point of a 618 retracement, and then you can see it started going down. There's our downside trigger at the 47.27. Okay, and then it activates these targets here for if wave 3 is extending. Like I said, there's a couple different wave counts here. That could be 4, or this could be 1, or this could be 1 of 3 and 2 of 3. There's 3 different wave counts. I don't want to confuse everybody by putting them all out there, but this is the primary wave count. Okay, so then we'll look for 5. If 4 is complete here, and it has stayed below that wave 1 low of 47.73, then wave 5 targets are right here, 46.92, 46.73 and a quarter, 46.63 and a half, and 46.49. See the red arrow down there. And we had a 47.02 target here, and it hit 47.01. I'm sorry, we had a 47.01 target and hit 47.02, another direct hit. So we're getting them up and down. There's 1, 2, 3, 4 in just the last 2 or 3 trading days. Okay, so that's the chart, the chart there. And then I want to get to the report in case there's something that I left out. Had a pre-market or a market open report. Might as well get right to the afternoon report today, Friday the 5th. Okay, and you can see all that right there, everything you need. There's the 1 down, the 2 up in parentheses, the 3 down, the 4 up. There's the 5 targets. There's where 4 has to stay below, the 47.73 1/4. Again, alternately, this could be 1 and this could be 2, or this could be 1 of 3 and 2 of 3 and 3 of 3 going down. So I have to see how that plays out. It's early in the pattern. It's only a couple days or so old, so there's lots of different scenarios where it can play out. But suffice to say, the market's putting in lower lows and lower highs, and it looks like the direction of trend has changed to the downside. Okay, there's the extension targets there, the near direct hit there on that low of 47.27. All right, and that'll be a big one, and it got below it there. A big one to get below and break out that 4700. Okay, there was that one that was activated. Okay, and there's the further targets down there. There could even be a 3.618, but this is the smallest degree of trend. So again, this 47.27 could be surpassed to the upside, which it was. Okay, but that trigger's still in effect. Where is this wrong? Okay, the market goes above 47.73, it'll eliminate that 4. Okay, and obviously if it goes above the 48, 41.50, it'll eliminate the 1, 2, 3. Okay, so we always know exactly where we're wrong on the wave count and where we're wrong on our trades, and that should help us because Elliott Wave allows us to be within 1/100th of a point accuracy of being wrong. What else is there? There's a 47.01 and 47.02 afternoon update. Retracements for wave 4. There's that direct hit to within 3/4 of a point. Okay, and there's the wave 5 down targets there. Validation for wave down that it's in play comes with a move below that 47.02 wave 3 low. Okay, and that's right there. So let's leave you guys with this, which is basically the same thing. And you can see we got 3 down, we got 4 up, and we've got 5 down coming into play. We'll see where this goes from here. If this is a 4, it could be complicated. It could be a big triangle forming. You know, it could take days to play out. So we'll see how it looks. You know, bouncing around between 47.02 and 47.61. Wouldn't be surprised to see that, especially if it is a 4. 4s are hard to trade, so get in and get out. But get in before and out before and get in after, because 5s, again, as you saw in triangles, things, let me show you guys triangles. This is a 4th wave triangle. You get a thrust. It's in the direction that the market was moving before it went to a triangle. So it was going up, went into a long triangle, and then thrust to the upside. That's R.N. Elliott's words. Okay, that should do it for today. Let me leave you guys with that there. Okay, we'll see how this plays out, and thanks again for watching, and hope you guys are all having a good start. Happy New Year, and until next time, take care, everyone.